Hey there. Let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. So, you know how Bitcoin had its halving event? Since then, there's this new kid on the block called Runes, and it's pretty much taken over the Bitcoin transaction scene. We're talking a whopping 68% of all transactions since it started. Huge, right? Now, with Runes in the game, the money miners make from transaction fees has dipped. It seems like everyone's jumping on the meme coin and NFT bandwagon, trying to snag those rare Satoshis through Runes. It's like a digital treasure hunt. But here's the kicker. Runes is actually an upgrade of this thing called the Ordinals protocol, which itself is a twist on the BRC20 token standard. It's all about making new tokens on the Bitcoin network. However, not everyone's thrilled about it. Some folks are giving it the side-eye because it's hogging too much space in the transaction blocks. And to top it off, the daily transaction fees are all over the place, which means miners' paychecks are kind of unpredictable. It's a bit of a roller coaster for them. That's the gist of it. Runes is dominating, fees are fluctuating, and the Bitcoin network is like a playground for meme coin and NFT enthusiasts. This time around, miners were bracing for a hit to their wallets since these rewards are their bread and butter. But plot twist, right after the halving, their earnings shot up to a whopping $100 million. Why? Because everyone was super excited about this new thing called the Runes protocol. It's like a fresh way to create tokens that are all twinsies with each other, just like Bitcoin's tiny Satoshis. This caused a frenzy of activity on the network, and miners were raking in cash from the sky-high transaction fees. However, as with all trends, the hype around Runes started to cool down. The fees took a nosedive, and so did the miners' payday, halving from that peak. Now, they're feeling the squeeze as the revenue stream isn't flowing like before. And to top it off, Bitcoin's price is playing it cool, hanging around $63,900, after taking a slight dip over the last week. So while the Runes gave miners a brief moment in the sun, it looks like they're back to watching the weather for the next big thing. Who knows what'll happen next in the land of crypto, right? So, Bloomberg just dropped some news that's got the Bitcoin mining crowd on edge. Apparently, mining for Bitcoin isn't the gold rush it used to be. The hash price, that's like the daily paycheck for miners per petahash of computing power, is scraping the bottom, almost hitting the record low we saw after that whole FTX mess. Now, this is a big deal because it comes right after Bitcoin's latest halving on April 20th. Usually, halvings are like a Bitcoin birthday party where its value goes up, but this time, it didn't do much against the gloomy vibes from the global economy. Luxor Technologies even coined the term hash price to capture the tough times miners are facing post-halving. This event, which happens every 4 years, slashes their block reward earnings in half, all to keep Bitcoin's release on a tight leash. On D-Day, the hash price had a moment and spiked to $139, thanks to the Rune protocol stirring up the transaction fees. But as things settled down and mining got harder, the hash price took a dive to $57, just a whisper away from last November's low of $55. This plunge means miners are earning way less, and now they're leaning more on transaction fees and crossing fingers for Bitcoin's price to climb. For the little guys in mining, this is rough seas. But the big fish like Marathon Digital Holdings Inc. and Riot Platforms Inc. saw the storm coming. They've been bulking up on fancy gear and massive mining setups to weather the profit squeeze. Marathon Digital, for one, isn't just sitting around. They've cranked up their goals and are aiming for a hash rate growth target for 2024. That's through the roof. They kicked off the year with a hash rate capacity of 24.7 exahash per second and are gunning for a 46% boost. With some smart buys and more machines on order, they're looking to hit a hash rate of 50 EHS by the end of the year. Fred Thiel, the big boss over at Marathon, is pretty chill about hitting these targets without digging into more capital, all thanks to their solid cash flow. In a nutshell, while Bitcoin mining is hitting a bit of a rough patch, The big players are doubling down and getting creative to stay ahead of the game. So, the scoop is that Republic First Bank just got a big red closed sign slapped on by the feds. It's the first bank to go belly up in 2024, and the crypto folks are buzzing. They're all like, "See, we told you so," thinking it's a win for crypto. Meanwhile, Bitcoin and Ether took a tiny stumble, with Bitcoin dipping below 65K. And guess what? This isn't a one-off. 5 banks bit the dust last year. Tough times for traditional banking, huh? So, check this out. UK cops just got a major upgrade in their crime-fighting toolkit. They can now swoop in and snatch up digital assets like cryptocurrencies if they're linked to shady dealings. It's all about cutting off the cash flow to those big-time baddies who think they can hide behind their screens and launder money. And get this, they don't even need to cuff someone to dive into their digital wallets. Found a USB stick lying around? Bam. It could be evidence. This is a game changer, especially when dealing with crooks who are all incognito or chilling abroad. Take the recent bust by the NCA and DEA, for example. They took down this massive drug ring, grabbed a bunch of cash and crypto, and put some folks behind bars for peddling fake meds and messing with VAT using NFTs. Talk about a crackdown. So yeah, it's pretty clear the UK isn't playing around when it comes to cleaning up the crypto streets and keeping the economy on the up and up. So, the CryptoQuant CEO, Ki Young-ju, is stepping up to the plate batting for crypto mixing. He's like, "Hey, mixing isn't a crime, folks. It's all about keeping your business private in this Web3 world." And he's not alone. After the Samurai Wallet devs got nabbed, the whole crypto community is kinda on edge. They're worried that Uncle Sam's getting a bit too hands-on with the privacy tech in crypto. Now, the DOJ's throwing around some hefty accusations, saying Samurai Wallet laundered a cool $100 million from the dark web and didn't bother with a license. But here's the kicker. Even the big-shot crypto exchanges mix things up to protect their users' privacy. It's pretty standard stuff. And guess who's chiming in? None other than Edward Snowden. He's all about financial privacy being a basic right. So, while the law's doing its thing, the crypto world's buzzing with debates on privacy, rights, and staying on the right side of the law. About what's got Senators Warren and Cassidy fired up. They're super worried about bad guys using crypto to hide their tracks while trading some really nasty stuff, child abuse material. They've hit up the DOJ and DHS because they want to make sure the law is a step ahead of these criminals. The senators are pointing fingers at how crypto keeps users anonymous, which might help the wrong crowd move money for illegal stuff. They're all about getting Congress and the administration the right tools to stop this mess and nail the culprits. Chainalysis and FinCEN are backing this up with some scary stats showing more of these crimes are going crypto. Over 1,800 Bitcoin wallets have been flagged for suspicious activities, and most of them are tied to child abuse material. Warren and Cassidy are pushing for answers on how the DOJ and DHS plan to tackle this, especially with crypto getting trickier to track. They've even got a bill cooking to tighten up the rules on digital money. So, yeah, it's serious business. So, Eminem is stepping into Matt Damon's shoes as the new face of Crypto.com. That's right, Slim Shady himself is bringing his star power to the crypto world. The big reveal is set to happen during an NBA playoff game at the Crypto.com arena. Talk about making an entrance. Remember Matt Damon's ad that got everyone talking? Well, it's Eminem's turn to stir the pot. Crypto.com is playing it smart, mixing celeb glam with the thrill of sports to keep us all hooked. With a user base that's 50 million strong across 90 countries, they're not just playing the game. They're setting the scoreboard. So, what's the deal? It's all about keeping Crypto.com in the spotlight and showing that they're the cool kid on the blockchain. Eminem's got the mic now, and the world of crypto is all ears. So get this. Yao Qian, the dude who's pretty much the godfather of China's crypto scene, is getting the side-eye from the government. He's the brainy cat who set up the digital yuan at the People's Bank of China, and now he's caught up in some legal drama. The bigwigs at the State Commission for Discipline Inspection are sniffing around Yao's business, trying to figure out if he's stepped out of line. Yao's not just any techie. He's been the driving force behind China's blockchain boom, and even after leaving the PBOC, he's kept his hands in the crypto cookie jar, leading the tech charge at the Securities Regulatory Commission. This guy's the mastermind of the digital yuan, and he's stayed in the loop, dropping knowledge at seminars and keeping the conversation going. With Yao under the microscope, there's a buzz about what it means for the future of blockchain in China. And while all this is going down, Yao's keeping it zipped. No comments, no tweets, nada. But you can bet everyone's glued to their screens waiting to see what happens next. Stay tuned, folks. So we've got over 400 million crypto wallets buzzing around now, and that's got investors feeling pretty good about things. People are more into crypto than ever before, with wallets stuffed with more than just digital dust and transactions flying off the charts. Here's the scoop. We're talking a serious uptick in active wallets, which means folks are optimistic about their crypto investments. Investors are busier than a hive in spring. They're not just holding crypto, they're moving it, shaking it, and breaking past records set in 2020 and 2021. Even the traditional finance giants are getting in on the action, tweaking their suits and ties to fit into the blockchain party. Sure, mainstream crypto is cool, but it's also a bit of a puzzle for the powers that be. Governments and agencies are scrambling to get their heads around it all, trying to keep things safe and sound. And for a taste of what's happening, on-chain chatter. The blockchain's lit up with more action in 2024 than a New Year's Eve party. Tech upgrades, Bitcoin's Lightning Network, and Ethereum's Layer 2 are getting facelifts, making everything smoother and faster. Lightning strikes. Thrice. The Lightning Network's not just growing, it's tripling down on its channels. Ethereum's Shadow. Layer 2 projects are stepping out, doing so much they're even outpacing Ethereum's own daily hustle. So while the crypto world's getting its groove on, it's also making sure it doesn't step on any regulatory toes. Pantera Capital is making waves in the crypto investment world, aiming to raise a whopping $1 billion for their new fund, Pantera Fund V. This fund is all about early-stage startups and blockchain assets. They're not new to the game either. They've previously sought $1.25 billion for a second blockchain fund, and their liquid token fund has already seen a 66% return in the first quarter of 2024, managing a hefty $5.2 billion across 3 distinct fund strategies. Pantera is a powerhouse in crypto investments, with over 190 projects under their belt. They're also the sole investor in Infinigod's Series A round, a Web3 gaming project that's pioneering mobile gaming on the blockchain, tackling user experience challenges with on-chain activities. Infinigods has already launched their first game, Infinimerge, in January 2023, and they're cooking up more titles like King of Destiny and the strategy defense game Immortal Siege. The funds raised will fuel their vision to lead the future of mobile gaming and expand their blockchain infrastructure globally. Previously, Pantera led Infinigod's seed round of $9 million in May 2023, alongside other notable investors.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.